Happy New Year, folks. This is Andrew Nadeau from Stonehearth Capital Management here with an educational economic update for January 2022. In this month's video, we'll discuss some recent headlines that influenced the financial markets in December. I will also provide some perspective on what these developments may mean in the months ahead. Please stay tuned at the end of this video for a required disclosure statement. Stocks closed out the year on a high note as positive economic data helped outweigh negative sentiment over increasing COVID-19 positive cases. The month did not start off on a high note, however, as the monthly reading on the jobs report left much to be desired. The most recent report showed that the pace of job gains slowed in November as 210,000 new jobs were added, well below the 2021 monthly average of 555,000 new jobs. The unemployment rate did tick down slightly by 0.4% and now stands at 4.2%. While the jobs report didn't offer much in optimism in December, the manufacturing industry continued to provide positive momentum. The latest report on industrial production showed an increase of 0.5% in November and a 5.3% overall increase in production since November 2020. The manufacturing industry is now operating at its highest level since January 2019. Also providing optimism was the monthly housing report. The most recent release showed that sales of existing homes increased 1.9% in November, marking the third consecutive monthly increase. New single-family homes also advanced in November, climbing 12.4% after following a revised 9.2% in October. With looming supply chain constraints, it will be interesting to see if this momentum is sustainable. The Federal Reserve Board also met during December. While the committee decided to leave rates unchanged, they agreed to accelerate the tapering of accommodative asset purchases to $30 billion a month, starting this month in January 2022. The FOMC also acknowledged that inflation is broad-based and attributed it to supply and demand imbalances related to the pandemic and the reopening of the economy. Markets finished the year in positive territory, with the Dow climbing 5.38% in the month, the S&P 500 gaining 4.36%, and the tech-heavy NASDAQ eking out a gain of 0.69%. While 2021 will be remembered as a year of change, the year 2022 should bring continued economic recovery as the United States and the world inch slowly toward normalcy following the battle against COVID-19 and its many variants. Markets, employment, and production should continue to advance, but pay special attention to the Federal Reserve and how they manage continued inflationary pressures and how quickly, as well as how often, they make adjustments to the federal funds rate. That's it for this month's Educational Economic Update. Once again, this is Andrew Nadeau with Stonehearth Capital Management signing off for the month of January 2022. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal, financial situation, please give us a call at 978-624-3000. We'd be happy to talk to you. Thank you.